For their stock to fly high, this company needs to give you wings. Whether saddling up for a big game or testing their tolerance for Buffalo-style heat, can consumers make Wingstop a stock to sink your teeth into?
Yeah, the worst thing about earnings season is it doesn't always make sense. Sometimes the market's just plain wrong about a quarter, and watching that play out could be incredibly frustrating. Just look at the stock of Wingstop. This morning, the beer and chicken wings chain reported what I consider a serious contender for the best third quarter in the entire restaurant space. That space is challenged. Listen to what Wingstop did. They posted a 3-cent earnings beat off 17-cent basis with higher than expected revenue, and most importantly, their same-store sales were mind-blowing, up 11.9% year over year. Even better, management raised their full-year forecast. And what happens? Well, the stock actually got hit this morning for only rebounding a tiny bit, closed up 1.5%. Yet Wingstop, well, let me just say, it shot the lights out. I got to tell you, this reaction is incredibly dispiriting. Wingstop's been pummeled for the past couple of months. It's part of a broader rotation out of growth stocks and into value names. Normally, when a stock sells off going into earnings and then the numbers are much better than expected, that's a recipe for a huge rally. Yet, for some reason, Wingstop's in the Rodney Dangerfield mode. It can't get no respect. I think the market's making a mistake here. Don't take it from me. Let's dig deeper with Charlie Morrison, the chairman and CEO of Wingstop. Find out more about the quarter and his company's prospects. Mr. Morrison, welcome back to Mad Money.
Great to be here, Jim. How are you?
Well, Charlie, I got to tell you, I'm confused. You had by far the best number. I mean, there wasn't anyone even close. And yet there may be Chipotle, maybe not. But all the owners of Wingstops are making incredible money with a small format, which is incredible. It's in itself. Tell me what's going on in the industry that people believe that the best times are behind them, including for Wingstop.
Well, I don't believe the best times are behind us at all. We've had a great track record of consistent positive same-store sales growth. This year will culminate in our 16th consecutive year of positive same-store sales growth. Great unit development, on pace for another 10% plus delivery in terms of new unit growth for the brand. We have all the right sales drivers in place, including increasing our national advertising, the advent of digital, now at 36% of our total business mix, and a growing delivery business that now comprises 80% of our restaurants. So we have a bright future ahead of us, a lot of runway for growth, not only here in the U.S., but across the world.
I wanted to ask you about across the world because I think your formula is uniquely, let's say, transcends borders. I've seen it with KFC. I think Wingstop offers a better value, frankly. How aggressive can you be overseas, knowing that at the same time it is far away and you want it to go right in terms of quality?
Well, I think we have a lot of potential. In fact, probably as big as the opportunity we have here in the U.S. alone. Chicken is the most consumed protein in the world. Bone-in chicken, just like chicken wings, is a favorite and a fan favorite everywhere in the world. Our unique flavors, the ability to have variety for everyone, makes our brand very portable. And I think you see that in our performance so far. Roughly 140 restaurants just so far, but we're already emerging as one of the top casual dining plays in Mexico. That franchisee just signed a new development agreement to more than double their penetration to up to 200 restaurants in Mexico alone. We just opened up in London, our second location. Great results in both of those so far, very early in the process. We have a long way to go.
All right, Charlie, I was on the Grubhub conference call yesterday. It's kind of dispiriting, frankly, because the company seems to have hit a wall, so to speak, and it's a venture capital wall. It's not a wall by their own making. It seems to me that their pain is Wingstop's gain. Am I reading it wrong?
Well, I think we've done a lot of research in the space over the past few years as we got ready to implement delivery this year into our business. We took a very methodical approach. One thing we like about our partnership with DoorDash is that they're focused on the merchant, us, our franchisees, making sure that they're delivering a great logistics solution that's profitable not only for our franchisees, but for them as well. We recently just renegotiated our contract with them. We're getting ready to start advertising delivery next year. We're very bullish on the opportunity and the upside that our committed partnership with DoorDash has to play for the future.
I'm trying to figure out how they make money because, frankly, if it's free to the customer, that's an unbelievable deal. Why would, I know I'm supposed to ask them, but they're private. Why would anyone agree to that kind of deal? It's particularly because they're sharing all the information about the customer with you, so you've got all the digital stuff you need.
Well, I mean, they make money, certainly, and they make money 3 different ways. They do charge a fee for delivery, which all the pizza players have done for years, as we know. They also have a small commission that we pay to them for the facilitation of the service, which offsets the labor that we would otherwise have to invest in the business. The last piece is a tip on the transaction that's paid by the customer to the driver. If you combine the 3 of those together, DoorDash can make money off a brand, especially like Wingstop. We have a higher average check, a lot of takeout business already. Delivery is a perfect fit. And I think if you maximize that equation, everybody's going to win.
Were you surprised about the notion of the promiscuous consumer that they talked about in the Grubhub shareholder letter?
Yeah, we wouldn't refer to them that way. We call them loyal consumers, people who want to make sure that they're enjoying a quality occasion. And that's why we picked DoorDash as our player. They have the best solution for a quality occasion that matches up with exactly what Wingstop consumers are expecting out of us. So it's a win-win in the relationship for us.
National advertising, something that I know the franchisees absolutely love. Are you getting, when you see national advertising, more door knocks, more companies saying, more guys saying, listen, I own 18 McDonald's. I want 18 Wingstops. Will you let me do that? Is that what national advertising also does besides bringing in the doors?
Definitely. In markets that are emerging, that are growing for us, that haven't been penetrated beyond 25 or 30% of their potential, we are seeing that kind of sentiment from both our existing franchisees who want to continue to grow, and they make up 80% of the development of the brand each and every year. But we also have a lot of attractive new prospects that are coming in the door saying just what you said. Let me take an opportunity to expand this great brand, and we're winning with them.
Well, one last question, Charlie. I know the market may not appreciate all the great things you're doing, but you have been very good to shareholders. You're never afraid to pay a special dividend, return a lot of capital. Stock down here. Don't you feel like rewarding them a little more?
Well, we're going to continue to reward them. You know, since our IPO in 2015, our total shareholder return has approached 400%. That's the inclusion of just the growth in the business plus those special dividends and return of capital to shareholders. We're going to continue that strategy well into the future.
Well, Charlie, you're a money machine, and the customers love what you're doing. I think the delivery is so unbelievably good. I want to thank you for everything you've done for shareholders. It's always great to see you, sir.
Thank you, Jim. Appreciate it very much.
Guys, this is a one of a kind, all right? Charlie Morrison just keeps delivering and delivering. They have a lot of cash. They have a lot of things they can do for you to reward you. This stock is right to buy in an environment where I know that Yum was not. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.